We're now into chapter number 3, where the topic is called Gross Income Inclusions. The word gross income is similar to the term total income. That's a specific line on the 1040 form. And when we enter all the amounts of income, the total will be that gross income or total income that we have to pay taxes on. This word inclusion means the amount just has to be included on the return. In fact, another term you may see for inclusions is the word taxable. Income that is taxable or subject to tax. Or another term you hear in this chapter may be the word recognize. You have to recognize or report the income on the tax return and you pay taxes on it. There's different types of income, and we're going to see a lot of them here in chapter 3. But one type called business income or capital gains and losses and rental income, all of those are topics we're going to save for next semester. So if you continue into the next tax class, that's accounting 137. Well, first here you have to pass our class, accounting 134 with a C or better grade. Then you can go into 137 and you'll see business income and capital gains and losses and a landlord's rental income or loss. Again, that's in the next tax class using the same textbook. Let's take a look at some general concepts or guidelines regarding reporting of income. So here's the general rule. It says that taxable or gross income is everything, all the income from any source that the taxpayer gets during the year, except if the tax law, here's that opposite word, excludes that income. So the tax law specifically has to say this type of income is tax-free. Otherwise, you have to assume the income is taxable, is includable. You have to pay taxes on it. Here's a similar word again, recognize. The income that's recognized is income that's subject to tax. And again, the opposite of that is income that is excluded. Again, the word here appear, excluded by law. And we're going to have the next chapter, chapter 4, telling you which types of income are excludable or tax-free. Now, there is some type of income that is both taxable partially and non-taxable. Okay, so we're going to see some of that maybe in this chapter later on. An example would be possibly the Social Security retirement income a taxpayer receives. Okay, so in this chapter, we're going to learn various types of taxable or includable income. Another concept that we're learning here at the beginning of chapter 3 is when do you report income? Okay, in which year are you going to report it? And that depends upon something called the accounting method, the accounting rules that the taxpayer uses. And for most people, individuals like you and me, we use an accounting method called the cash method. For cash basis taxpayers, they're going to report income in the year they collect money, or if not money, some type of asset or property, or if not something physical, maybe they can get a service from somebody else. When you get this benefit from somebody else, that's the time, that's the year in which you're going to report the income. So let's say that maybe here is the year 2020. This is a timeline, and here's the end of the year. And of course, the following year is 2021. So for most of us, if we have a job, we usually get paid twice a month or every 2 weeks. So here, let's say at the beginning of December, we work and then a couple weeks later, we collect our pay and we work and we collect our pay. But those last few days that we work in December, even though you earned the money, you didn't collect it yet. You didn't receive the money yet. It's probably going to be received here next year. So that income you earned here at the very end of the year, even though it's owed to you, according to the cash method of accounting, you don't report it until at the time you collect it. And here you can see you can defer, you can postpone it a whole year just because you have to wait a few days to get your paycheck. Okay, so that's most of us follow this method. Now, if you take other accounting classes besides the income tax classes, the main focus, one of the big objectives, is to learn the other method of accounting called accrual basis. Accrual basis accounting typically applies to most businesses. Yeah, so that's again going to be a topic probably for next semester. So if you were accrual basis a taxpayer, you know that earnings you made at the end of the year that you didn't collect, you gotta report it at the time you earn it, which would be in 2020. Now, I've never seen an individual that doesn't have a business, not a business, that is accrual method. Okay, many businesses use this accrual method. Most individuals, like again you and me, we use this cash method, which is simpler. In those other accounting classes you take, typically what they call financial accounting. Here is the main thing you learn, the accrual method of accounting, where you record income in the period, in the year in which it's earned, and not necessarily when the money is collected. Sometimes the money is collected ahead of the time you earn it. Sometimes the money is collected after the time you earn it. Sometimes the money is collected at the same time you earn it. Okay, but accrual basis is I don't care when you collect it, you just report the income in the period you earn it. Here, a cash method, you collect it ahead of time, you collect it at the same time, collect it after you do your work. It's when you collect the money. That's cash method, which is simpler. There's some examples of not going accrual method for businesses that is mentioned here in exceptions. But because this is a topic for businesses, typically, we're going to save these exceptions for the next semester in our next tax class, Accounting 130, 137. So let me stop this short video here and continue in part 2, where we're going to learn about being an employee and getting compensated, getting paid by your employer.